Devin, that was a good joke. That made me laugh, for real. So this guy Devin and I have been going back and forth this morning about, because I said I'm going to get, excuse me, a new studio. So I have a new studio moving over there on Tuesday. So he said, does the new studio come with a PC? And I said, no, MacBook, because PCs are for serial killers. And then he said, when I had 10 seconds left on the countdown, Mo versus computer starting in 10. That was a good one. Okay, emergency Fed meeting on the 14th. I have no idea. But futures are up. I woke up at 6:30 this morning. I started looking at futures. They were getting smoked, and it just kept getting better and better and better, and now we're positive. So that's cool. The 10-year is up to sitting at 2%. The 10-year spiked yesterday. 26 basis points. That's the biggest one-day spike since the financial crisis in 2008. Crazy. Hey, I don't know what to tell you. All right, let's get into some stuff. Where do I want to start? We might as well start with the inflation stuff. So, inflation scare. Will the Fed be forced to hike interest rates before March? The mood on Wall Street in the wake of Thursday's shocking CPI number. What the hell is shocking about this? You've printed trillions and trillions of dollars. You've given away endless amounts of money. You've been stimulating the economy for over a decade, and this is shocking? Come on, man. Shocking. Interestingly, the market now prices in the risk of some emergency hikes before March. Wrong. Markets don't price in anything anymore. Markets react to the news of the day. If the Fed comes out and says that they are going to hike interest rates before March, an emergency hike, you better believe it, you're going to see this market react. I promise you that there is no chance that this thing has been priced in. Markets don't price things in anymore. We see that every single day from the daily insanity that happens and volatility that we see in this market. Markets don't price things in. Don't buy that for a second, guys. Markets do not bake things into them. It just doesn't happen. Corporate America continues to warn on the price of things of labor and commodities are simply getting out of control, forcing them to jack up prices. Based on what we see, it's going to be a high single digits to 10% for, what is this, inflation? Potential price increase of 2022. Yep. Deutsche Bank now sees 50 basis point hike coming in March and 5 more 25-point basis increases this year. Goldman says that they are going to see 7 increases this year. This is 2022, right? Yeah. The 10-year went up. This is what I said. 26 basis points yesterday. The largest since the financial crisis. And a recession may be hard to avoid. So, oh boy, here we go. But don't worry, guys. The Fed said inflation is going to be gone by the end of this year. Why? Who the hell knows? But it's going to be gone by the end of this year. It's cool. Don't worry about that. Let's stay on the topic. The average household spending is an extra $250 a month or $3,000 per year due to high inflation. But middle-aged Americans are paying even more. The latest CPI thing came out at 7.5%, representing 40-year high. The cost of everything from rent to dairy to used cars rose in January, showing how inescapable the run-up in consumer prices has been. The average household is spending an extra $250 a month. People between the ages of 45 and 54 are born in the largest brunt of high inflation, seeing their expenses increase $305 a month on a monthly basis. Comparatively, Americans who are 65 and older are only spending $149 a month. Supply chain challenges have remained a driver of high inflation through the pandemic, but those issues could start being abated soon. Why? Just because. It's just because. There have been some signs that the stress in the U.S. supply chain is easing, and if sustained, it will be a significant source of disinflation of the core inflation this year. Again, why? Don't worry about it, guys. Just because. You have chip companies out there in Taiwan and stuff saying that we can't do anything about the chips through 2026, but don't worry. Don't worry. It'll be fine. Don't ask questions. Nobody question to why. Just roll with it. It's going to be okay. Apple buys startup that makes music with artificial intelligence. You know what? While I'm on that, whatever. I'll just keep going. Apple buys startup that makes music with artificial intelligence. This is pretty cool. Apple has acquired a startup called AI Music that uses artificial intelligence to generate tailor-made music. This is going to be the next big thing in the music industry. Spotify is going to go do it. If Pandora still exists, they're going to go still do it. But Apple, I think, is making a play to become... Listen, I've talked about it many times on all the Apple videos that we've done. Apple is becoming a subscription. They're always going to have hardware, I think. But subscriptions are going to drive that company. And the better that they can make Apple Music and any other subscription service that they have, with Apple One especially, they are going to start to dominate the market. Spotify currently holds the market on music, but we're going to see what happens with that. The idea is to generate dynamic soundtracks that can be changed on the user's interaction. A song in a video game could change to fit the mood, for instance, or music during a workout could adapt to the user's intensity. That's pretty sweet. On its LinkedIn page, AI Music said its goal is to give consumers the power to choose the music they want, seamlessly edit to fit their needs, or create dynamic solutions to adapt to their audiences. I don't know how big this deal was, but AI makes tailor-made or Taylor Swift music. Taylor Swift and Ed Sheeran came out with a new song today. Let me be the first to tell you, it's terrible. Okay. So I'm going to do 2 stories before I get a little saucy. Why hedge fund manager Doug Cass says his bearish case is now stronger and the buyer of the dip should buy their time. Good morning, Tim. All right. It is in my view that the odds favor that the rally over the last 2 days of January into the first week of February may have been a bear market rally and the first shot across the market's bow, providing a greater trading opportunity, but not likely the basis of the new bull market leg. He fears that the Federal Reserve has this time waited too long to raise interest rates. you don't need to raise interest rates you don't need to raise interest rates to bite inflation. All you have to do is just say that inflation is going to go back to 2% and it's going to go there. Duh. The later stage of an economic recovery and its risk causing an accident, which he thinks will start emerging in the debt market. Valuation and markets are unfriendly right now. Ongoing logistic and supply chain issues will exacerbate the situation. Clearly, this guy hasn't listened and heard that the supply chain issues are going to be over before the end of the year. Oh, those issues will not be resolved by this year. Oh, well, damn. Go to your local Starbucks and see that they're closing at noon because of a lack of workers. Oh, shoot. Cass sees a negative year for stocks and a normal 15% valuation reset lower, historically consistent with what happens when the Fed lifts interest rates by 100 basis points. Okay, what else do we have here? We are looking for the tells and the early warning signs whether the recent market weakness will continue. And a good place is to start in the junk bonds market, specifically the volatility of that market. Man, I wish I understood bonds. I don't think I'm smart enough to understand bonds. Bonds are for the smartest guys in the room and the most detail-oriented in the room. I read security analysis, which I don't recommend anybody read. But the bond section, it took me like 6 weeks to get through the bond section. It was something. All right, Canada Goose. The reason I bring this story up, one, in 2019, Canada Goose could do no wrong. They were going to the moon. It was the greatest thing since sliced bread. Everything was just amazing about this company. It's a freaking jacket. But mind you, it's an $800 jacket. Mind you, I have one, and these jackets are phenomenal. So if it's in your price range, I highly advise you stop beating around the bush and just go and buy one, because I beat around the bush and bought like 10 jackets because I didn't want to spend $800 on a jacket. I finally spent $800 on a jacket, and now I'll take out the trash in 0-degree weather with no shirt on but my jacket on, and it is just phenomenal. So go get a jacket. Shares of Canada Goose had their biggest drop in more than 2 years after the maker of the parkas cut its annual forecast. I don't really care. My point to say is that stocks aren't forever. And even if we go and look at what Canada Goose has done, I know many users know this, but I just want to show you. Let's pull up a long-term chart. Let's zoom out. Look at this. This is just like a parabolic rise. Best thing of all time, $72 a share. And here we are at $29 a share, $28 a share. So not everything is forever. Okay, who do we want to talk about next? Meet Kevin or Kathy Wood? You tell me. I'll tell me. Let's start with Meet Kevin. Tesla cuts its steering component from a car to deal with a chip shortage. Guys, let's talk about something here. And there's a video that might come out. I don't know. If you look at the car company and the car industry over the past, call it 18 months to be whatever. 18 months. They've struggled, for sure. Tesla is the company that has not struggled, okay? Tesla, as a matter of fact, there's a rampant chip shortages going out there the chip shortage will be done by the end of the year, don't worry. But there's chip shortages going on out there right now. What Tesla did is they went and found chips that were not in shortage areas. They reprogrammed all of their software and used those chips that are in surplus to put inside of their cars. I don't see Toyota doing that. I don't see disruptive Ford doing that. I don't see GM doing that. I see one company doing that, and that's Tesla. So everything's getting better for Tesla. Additionally, they found a way to cut a steering component out that they thought was redundant. So what I'm saying here is that everything that Tesla has done has made the company better and have a competitive edge over the rest of the car industry. And our buddy, Meet Kevin, went and sold all of his Tesla, even though he had a $6,000 valuation on it. Times are coming tough. So the company is getting better and being more innovative and being more incredible, but he's going in and saying, yeah, I have a $6,000 valuation, but times are getting a little bit tough. The guy's a scam artist. Just want to say that. Just want to get that out there. Scam artist, scam artist, scam artist. And you could suck it. But Tesla's incredible, what they've been doing. So look at this. Tesla decided to remove one of two electronic controls that normally included in the steering rack in some China Model 3 and Model Y cars. The omission indicates, I don't know if this is true, this is just coming from this one story. The omission indicates that Tesla has made changes beyond the company has publicly revealed. It also means that Tesla can't turn all of its existing cars into driverless vehicles. I would double check that one, but if it's true, overpromise, underdeliver as usual. At this time, the manufacturing underway in Shanghai, Elon Musk said it's been a really bad supply chain issue. But the good thing is it's going to be done by the end of the year, so that's cool. The specific item omitted was an electronic control that translates steering movements, whatever you want to say. The engineers deemed it redundant, primarily as a backup. So listen, I think this company is incredible. I think they're incredibly forward-thinking. I own a car. They're great. And if you are a true bull on this and you think that Jeff just said, meet Kevin's intelligence is transitory. Well, that's true. Okay. Speaking of other brilliant people, Zillow soars on upbeat outlook and faster than expected sell-off in homes. So Zillow to me is, they're on, I wouldn't be surprised to see them get acquired by somebody. I just don't think that they're the best. But that really doesn't matter at this point. Zillow shares have soared as much as 20% in extended trading Thursday after the digital real estate company said it's getting out of the home flipping business more quickly and economically than it previously expected. So let's go somewhere else. Here's the ARK Innovation top holdings. So these are the top 40 holdings from ARK. And Zillow is number 3. Wait, no. Zillow was number 4. Oh, that's Zoom. Zillow was number... Oh, this is getting weird. I thought I double-checked this before I went. Whoa, there's 40 holdings and Zillow's not in there. Oh, that's right, because she sold on the way down. So is she going to start buying now because it's disruptive again? What a clown. These people are freaking clowns, and if you believe them, you're a clown too. But I know none of you believe them. Anyways, speaking of straight fire, my Instagram this morning, I was on one this morning. I had a lot of things to say, including a new Bitcoin prediction. So at @TraderMo_EM. Let me see. I'm going to go through my own Instagram. Oh, we have something about Chairman Powell, new Bitcoin prediction. We talk about inflation. It's definitely going to go away. Oh, you'll see the last story. The last story is pretty incredible. But follow us at Everything Money Investing, at @TraderMo_EM, at Paul Gabriel, at Seth Kirchanen. And that is your daily dose of news for February 11th, 2022. What are the the bonds are, oh my gosh, we're under 2%. Yippee! Yields are just soaring. What reports today? Under Armour reported this morning. They are down. Cleveland Cliffs got nailed this morning. They are down below $20 a share. Let's see what happens on Monday. Is there anything Monday that anybody needs to be prepared for? Not that I see. Advanced Auto Parts. We know parts. We know cars. That's Pep Boys. If you want to join the software, 8 Pillars, Retirement Calculator, Stock Analyzer Tool, 8 Pillars Portfolio, exclusive content from the 3 of us. Click Join EM. Come on over here. $30 a month gets you access to that, plus the 6,000 people that are in the chat. If you want a more exclusive tier, that's with me in the Bid and Ask Nation. Come on in. You get all of the... Trading 101 series, Employed Trader series, monthly seminars. Plus, you get to talk to me all dang day. Who wouldn't want that? I'm sure there's people out there screaming at the computer, I wouldn't want that. It's probably the same person that told me to change the music before the show started. Hello, sir. I have an idea for you. Press a very simple keyboard on your thing. It's called mute. This. Boom. Look at that. That button right there. Gone. You don't have to hear it. But whatever. All right, it's easier to just complain instead of just do what I just did on a live show. All right, guys, smash the like button for me. Send me some stocks, and let's get at it. Mo, instead of going off at Kathy and Kev, you should try to explaining things calmly while drinking a champagne in a bubble like Margot Robbie in The Big Short. That's actually a really good idea. Really good idea. Let's see. Doesn't Jerome Powell have a hearing on Tuesday? Monday might be interesting. Is he I don't know what that is. I'm assuming he's testifying to the Senate about something. And it's a pre-scheduled Senate testimony. Let's see. Legend, thanks for the morning news. You're welcome, Jonathan. Okay, DBX. Oh, Jonathan, you were the one that sent something right after the show yesterday, and I meant to say thank you today. So thank you again. Dropbox, the worst cloud service storage out there. You're just consolidating hard. If you want to break through this 100-day moving average right here, you are going to need a lot more volume than you've had for the last 4 days. So you saw yesterday it flew up there and it pulled right back down. So without volume, you're not going to be able to challenge that 100-day moving average. Okay, next. We are in a bear market, and you guys are dancing on the Titanic. This person just wrote, I'm going to show his thing because he's an idiot. Effing idiots channel. We are in a bear market, and you guys are dancing on the Titanic. Zero knowledge in these bozos. Namachi, or whatever you say your name. Let me ask you a question. Were you coming into our channel and commenting when stocks were soaring and you were just flossing and everything? You're damn right I'm going to dance on your effing grave when you lose all your money. You better believe it, because you have no idea what you're talking about, and I'm talking right at you. You have no idea what you're talking about. We're in a bear market. First of all, we're not in a bear market. If you're saying that we're in a bear market, you don't understand basic definitions. That's the problem. So just leave. Just leave. I mean, you're an idiot. Go here, do me a favor real quick. Go to www.investopedia.com. That's different than reddit.com, and go and look what a bear market is, please, before you go and spew stupidity out there to everybody else. Ben. What is Ben? Ben? Oh, Ben Franklin. One of my favorite lines in The Office is when they have this Scholastic Day and they bring in the quote unquote male stripper, but it's actually Ben Franklin, and Michael Scott says to him something about Ben Franklin being president, and she says, and the Ben Franklin character goes, "Well, I was never president," and Michael says, "Yeah, I know, but the real Ben Franklin was." That's one of my favorite lines. Okay, look at this. So yesterday, really, it flew up there, and it tried to break all 4 major moving averages in one day, and it pulled right back down. Incredible. So be careful with this one. If you just go right here and just check, you're just in a consolidation area, and you have been for about a year, with the exception of these big blips that really haven't lasted too long. I would actually not even trade it over here. I would come right over here on a swing trading chart and try to trade it. Now, the good thing is, let me clear this. You're starting right here this morning below the 200. So what I would hope is that you actually just kind of climb like this with your engulfing candlesticks, run into that 200-day moving average, and at that point, take your profits, move on, and do something from there. So, yeah. Okay. We must be in a bear market because all my Palantir and Tattooed Chef is down. Oh, no. That's a funny one. Let's see here. Can you please do PHM? Yeah, of course. PHM. It's Pulte, right? Pulte Group. Let's see here. So, guys, with Pulte, be careful with listen. Wherever the housing market goes, Pulte is going to go. All we have to do is just zoom back, look at what happened in 2008. So be careful. Just be careful. I don't think that the housing market's going to pop, but a company like Pulte, a company like MI Homes, Taylor Morrison, Ryan Homes, just as you go down the list, they have a lot of inventory. So if they're the ones holding the inventory, bad things can happen. Not saying that it's going to happen. I don't even know what the inventory levels are, but these kind of companies that make these cookie cutter style homes can get whacked if we go into any type of recession. So you definitely have a downtrend that's happening right now. And by the way, when that happens, if that happens, be ready to short these things, because you're going to get some wonderful shorts coming out of these home builders, just like you did back in the financial crisis. Okay. Basically any recession. So downtrend, but with this downtrend, make sure you break this resistance point of $46, okay? You got to get below $46. And the good thing is you're below all 4 major moving averages. So let that happen first and then go on from there. Let's see. somebody was asking me about a stock before the show started, and I just can't remember what it was. Was it GM or GE? I'll just do both. GE. Again, this is just, you're just stuck in a range bound area. It's just consolidating right between $99 and basically $109, with the exception of a couple of blips here and there. But this right here, this just shows that GM is extremely susceptible to this market, and it's going to go when everything else goes. So you got the split, you got a little rally, and you've come right back down after the split. Remember when they split and everyone just thought this was the greatest thing since sliced bread? Well, it's not. You can't break through your 200-day moving average, and now you can't break through your 100-day moving average. So the next level is not going to be able to break through the 25 and 50, and it's just a downward trend from there. Secondly, high, lower, 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 lower. Your trend is getting real bad over a long period of time, and this is dating back to 2021. So be careful with this one. You could have a short. You have a head and shoulders pattern. You have a head and shoulders pattern going on right now. Head, shoulder, shoulder. You have an ugly face pattern too. It's just looking bad for GE. Let me go to GM. GM. Okay. Almost the same looking chart. So same thing. Just be careful. You don't have as bad of a trend going on your stochastics. But anyways. According to Reddit, a bear market is 3 consecutive green days for Nikola. Oh, I love it. I love it. What else do we have? Somebody else. Let's see. What else do we have? CME, VMware. Please do Baba. Viacom. We haven't done Viacom in a while. Let's see. I bet this is still pretty boring looking. Yeah. So here's the deal. You are irresponsible. You are guiding these novice investors into steep losses. Just horrible. I love this guy. I love going back and forth with these people. Dude, guiding people, I've never told anybody to buy or sell a stock. Unlike the other people, load up on this stock, it's going to the moon. Or let's load up on Tesla, it's going to the moon. Don't do what I do. You're in a different ballgame than I am. I can listen. Don't listen to me. I don't care. I'm just here to teach. If you don't want to listen, leave. See, this is the thing that really irks me. And I don't think it should. But everybody in this world today just complains about, they find somebody that they don't like and then they just complain. Just go somewhere else. Unless somebody has a gun pointed at your head and they have a bullet in the chamber and they're forcing you to watch me, there's an X button right up here. You just click that X and I am gone. I am disappeared from your life. But I know how much you love to frickin' hate me, and I just thrive off of it. So please, namache, unless you're the one person that hit the dislike button, please smash the dislike button. It helps my algorithm. And I know you hate me so much that you're just gonna have to smash that dislike button because you can't resist. And you can't resist coming here every single morning to watch my ugly mug talk. You just have to. You just have to. I just love it. I just love it. Anyways. Okay. Pretty consistent volume from... So here's a great example of volume. So with volume, you have the moving average, right? That's that yellow line right there. But we haven't hit that moving average for, I don't know, 10 sessions, let's call it. But the average has been extremely consistent, and that is okay for me. As long as the volume is consistent under moving average, I'm happy with it. And we're about 3/4 of moving average, so that's wonderful. And the dislike button has been smashed like clockwork by one person, like clockwork. Trolls on trolls. All right, here we go. So with Viacom, if I was you, if I was me, I would just try to swing trade this up to the 200-day moving average and move on from there. There's just too much resistance right here with Viacom. They've just been beaten and beaten and beaten. So kind of let this thing go down. Okay, next. What to do with Peloton? Great question. Peloton. Okay, so Peloton, obviously it has a gap to fill. The hard part about the gap here is all of these major moving averages. And we'll pull up Facebook after this and I'll show you the difference. Guys, notice you have to go through 4 major moving averages right here to keep going. So just hold on there. I would like to see this trend move into the sweet spot. I'd like this red line to move into the sweet spot and start moving up, but you got a long road ahead of you. Let everything settle down with what's going to happen with here's the thing. I think as soon as we get kind of a new direction from this new CEO, that's when you're going to start to get more consistent volume coming into Peloton. And it won't be as up and down every single day. You won't have these big swings of 25%. So that's kind of when I think it's going to be okay to go into Peloton and go on from there. Okay, next. All right, smart sneakers. I'm not blind. Plus, I'm talking about Peloton right now. Come on. All right. I just joined the chat. Has Mo done Discovery? I will do it. I will do it for you. Discovery Class A shares. Series A shares. Okay, downtrend. Here's another one. So long term, I would not trade this, and I'll tell you why. I do not want the chaos and volatility that's going to come from the deal with AT&T and the split and this and that. I think I would rather you come over here and swing trade this and just play with it on a more day-to-day basis than a long-term basis until that deal is kind of done, until we kind of figure out what's going on, etc. I just don't want somebody to get into this thing. They start running with it one direction or another, and then it just comes way back down here, or it starts moving down and then it just spikes way up here off of some news. So yes. Okay. Please do be, Shopify. Disruption. Okay, disruption at its finest. And I'm having so much fun today, I'm going to stick around for an extra 15 minutes. Sorry to all you haters. You just have to stay and watch because you can't resist. Shopify. Oh my gosh, wow. This thing is down almost $1,000 a share. This thing was almost at $1,800 and now it's at $900. This is crazy. All right. Look at how inconsistent that volume is. So this one has inconsistency in volume, and it's under the moving average of volume, the average volume. Now, with that being said, remember the other stock that we did? I can't remember what it was. Was it Discovery? I don't remember what the other stock was. Doesn't matter. But we had that consistency in volume under the average volume bar. So this one is a little bit different. What would I do with this? Well, you're at a very strong support level right here. Plus you're kind of moving up over here, kind of turning up over here. I might look for this to go for a little bit of a run. Maybe you'll get a run to that 50-day moving average. We'll see. Market's now open, of course, but I'm going to stay. What else do we have? CVX. Wow. So this is oil. Oil is just running like crazy. Now let's pull up a line chart, of course. We just want to see, do we have W formations? Okay, so here's the thing. You've had a nice run up with these W formations going to the top. Now look what we have here, and I'm going to try to blow this up a little bit more to the point. Okay, good. This is good. Let's go even more. Okay. So you guys see how the W is this W right here is higher than this W right here is higher than this W right here, okay? What we have right here is a W that is lower than the previous W. I don't necessarily like that. Now let's see if this thing can actually go and move to all-time highs today, but I do not like that I'm seeing that this W is lower than the previous W. Not a fan of that. We do not like to see that. That kind of tells me that the run is over. That, and I also just peeked over here, coupled with that we're getting a little bit of a downtrend on our daily chart, mixed with we've rolled over already on our long-term chart. This is a profit-taking situation, guys. This is where you take profits and see what happens. It's not exit the position. The exit wouldn't come until the red line dropped below 80%. But yeah, good one. Good stock to ask about. Good teaching session right there. Teachable moment for those of you. Can you explain the two stochastic lines represent? Second shadow. Good question. So %K, %D, they're just my trend lines moving that I look to move through the sweet spot. If you actually want to know the mathematical equations behind them, just go to Investopedia, type in %K and %D, and you'll have it. Just do so in that manner. And it's an equation. From math people, I've been told the equation's good, but I don't know. I'm not a math guy. All right. I mean, I heard the equation is simple. So Pinterest has just gotten smoked. I mean, big drop right there. Everybody thought that they were back right there. Another big drop. This happened. One of these two drops happened because PayPal was said to be acquiring them, but that didn't happen. So incredible downtrend, incredible dog stock. Again, I would just wait until we get consistent buying volume come in. To me, this company is starting to look at, there's so many people out there sniffing around and saying that we're going to get an acquisition of Pinterest because everybody wants their usership, but we will see. AXP. Wow, is this a flagpole if I've ever seen one, or am I wrong? Okay, you created a little bit of a W in there, but it wasn't a great one. I can certainly see this thing pulling back to 184, if not 175, which makes sense because that's those major moving averages right there. So this was not the strongest W formation in the world. So, yeah, little flagpole. But hey, with that being said, trend is good. Trust your trend. As long as the trend is moving up on you, good. But just make sure that this red line doesn't roll under the yellow line like that. Plus, take a peek over here. You're getting to the point where your daily is starting to taper off on you. So, all right, what else do we have? Are you looking at gold? So anything that I do with gold is from a long-term perspective, value perspective, I should say, I guess. Mo, are you pulling for the Bengals Saturday? Yes, because I don't want California to win anything. Etsy was, let's see what Etsy is doing. Etsy, this was a Jim Cramer special. He said this was phenomenal. That was up here at $300, and now it's at $144. So that's cool. So let's zoom out a little bit more with Etsy. I want to see if we're at any consistent support level, and we are. We have support built in here. Oh, a tiny bit, but you have declining volume. Declining volume and going into the 25-day moving average. That's not a good sign. To be honest with you, I day trade this and I move on. That's really what I would do. I don't think that I would do anything here. What else? PFE. Pfizer. Okay. This person just said, should I exit? So if I was doing this, well, I wouldn't be in it long in the first place because I have a downtrend over here and a downtrend over here. So I wouldn't be long on it anywhere. The good news is you're holding a 200-day moving average strong. But if it was me, I wouldn't be in it. Okay, Smart Seekers, thank you for apologizing. That was very nice of you. He said my internet was slow. I didn't see my message being sent, so I sent it 4 times. I appreciate that. Thank you. What is the length of my %K? %K is set up as 19% K, 4 and 4 on the other 2 indicators, and it's a 1-week trend. Let's see. Brazilian stocks Ambev. So let's see. I don't remember if this comes over. Is it ABEV? Is that the ticker? Yeah. This one comes over. Okay, so we're just, look at this. Just stuck in consolidation. Stuck in consolidation between 260 and $3, call it. I see what you want. I see what you're seeing right here. Now, the volume is incredible on this stock. Just know, let me zoom out one more time. Just know that this is a 50% stock, and the 50% will probably stop around 340 or 350. So, yeah. If you want to swing trade this, though, I see a pretty good thing. If this engulfing candlestick holds today, I'd actually like to see it a little bit bigger, something like that. And it actually holds and looks like this by the end of the day without any wicks. Sure, even though it's a Friday, go for it. AbbVie is in the Employed Trader series, so we look at that one every single day in the Employed Trader. Did you see Business Insider? Well, first of all, Business Insider is the biggest scam publication, maybe of all time. They're just a bunch of liars. Did you see Business Insider's article saying that Facebook drop proves that the metaverse is a bad idea? One earnings report killed the metaverse disruptive. So when it comes to Facebook and the metaverse, October, November was the greatest thing ever for this metaverse. Then, after that, Oculus was the #1 downloaded app in the App Store, so people are clearly buying into the VR world. Then it came out that people were worried about God knows what with Facebook, and now they're a dead company. Okay, logical. Even though $500 million has been spent in the metaverse, and there's already lawsuits that are happening in the metaverse between major companies like Nike. Okay, it's dead. Whatever you say. Sounds good to me. NLS, okay, Abercrombie and Fitch. I like girls that wear Abercrombie and Fitch. I heard that Abercrombie and Fitch is coming back. So I walked into an Abercrombie the other day because Nicole wanted to go there. I haven't been in an Abercrombie since high school, and I'll tell you, that smell is even more repulsive now than it ever was before. So that fierce cologne is just the worst. Okay. Fierce cologne just reminds me of Frosted Tips. That's all it reminds me of. All right. Abercrombie. Okay, here's what we like. I like this one. So this is what I would put a tracker share on, because you have a nice trend that's starting to move up. Your volume is decently consistent. You have a gap to fill, and that gap that you need to fill is completely void of any major moving averages. So this is a watch list stock. So I'm going to write this down. Their ticker symbol should be fierce. F-E-R-C. Are you looking at any value stocks right now? No. I think Facebook would do just fine without the metaverse. I absolutely agree with you. Totally wipe out the metaverse. Facebook is still undervalued, 100%. Still early for Meta. And thank you for saying that. Still early for Meta. Yeah, it's still early for Meta. The frickin' CEO came out on the previous earnings call and goes, yeah, it's going to take 5 to 10 years. Yes, it's still early for Meta. He told us it was early for Meta. What is wrong with people? Is there a list of stocks you talk about in Employed Trader? Scott, it is Apple, AbbVie, Bank of America, Caterpillar, Lockheed Martin, and the SPY, S&P 500 index. Disruptive cologne. Yeah, that's right. Ford, let's do it. Ford, disruptive. They're making an EV, so they should be at all-time highs, but they're not. So this incredible run happened because of this truck, and it came right back down to reality. Dropped below its 100-day moving average. The next move is going to be below its 200-day moving average, and I do see Ford falling into this range right here around 13 or 14 bucks. Their rally was based on news and not performance, and that is the end of that. Just don't worry, just buy Facebook. Okay. Facebook, let's see it. FB. Okay. Big drop. Let's see. Rebounding a little bit today. It's up 0.3%. So flossing. Here's the great news about Facebook. Here's your gap that needs to fill. I'll just draw it over here. Let's just draw a line for the gap. And look at that. This gap that needs to fill right here from 250 to 292 is completely void of all 4 major moving averages. You have virtually zero resistance in there unless the market creates the resistance. And honestly, you don't have a lot of resistance in there unless it just starts creating these like crazy up and down in this area. But this is going to be a really good stock when it starts to recover. What do I think about iRobot? You know, iRobot is interesting to me. iRobot is interesting to me. I don't know. What's your biggest trade and what ticker and when? Felipe, good question. Biggest trade, it depends what kind of trade you want to talk about. And I could tell you from there. But when it comes to day trading, my biggest trade ever was Lumber Liquidators. Lumber Liquidators was my biggest trade ever. Square. Wow, talk about a beatdown. So they really don't have a lot of support in this area. The next support level is down here around 98 to more, even more of a support is around 75, somewhere in there. So guys, be careful with this. This is a beautiful looking short. Just get ready to short it. Get ready to short it even more. As the market just continues to fall, Square is going to continue to fall, but that's probably just fear, uncertainty, and doubt. So don't worry about it. I'm probably just misguiding you. Okay, with that being said, as soon as NVIDIA falls and takes out that wick that was created on January 24th, go and short it. You're going to have a beautiful short in there. Then it'll be below the 200-day moving average, and you will be all right. Tesla to 1300 or 600. I don't know. I mean, it's totally irrational what happens there. I could see it going to both, but right now, based on the trend, it's going to be going to 600. If it takes out that January 24th low, and here you notice that low is right at the 200-day moving average. So if it drops below the 200-day moving average, you better look out, man. I mean, don't forget, the company's phenomenal. They're doing everything right. They're ahead of the curve on everything. But company and stock price are not a direct correlation. So, all right, I'll do one more thing. Snooze, I'll see you there. PayPal, one more stock. PayPal, beaten down, same deal. Actually, Facebook is in a better situation because this gap that you need to fill from, actually, I take it back. I completely take it back. Let's draw a line. There, here's your gap. There, right there. You are completely void of all major moving averages. So you have this entire room to run without any moving averages in the way. So again, we will add PayPal. PayPal. All right, guys. I'm gonna get out of here. I got a call in 15 minutes. That is that. And I will see you guys on Monday. Remember, follow me on Instagram at TraderMo_EM. I am going to hop on and do a Instagram live sometime tomorrow. I got nothing to do tomorrow. I literally don't have anything on my schedule tomorrow. It's so wonderful. I'm so excited. What am I going to do tomorrow? I'll go to the gym. That's about it. That's my life. See you guys. Have a wonderful weekend.